A farmer yesterday, floaters stuck in the mud. Parts of the crop went in from a plane because the ground would not carry a drill. Quarters that never got seeded at all. And he is already doing frost math in his head on a crop that is barely out of the ground. And that is the spring a lot of you just lived. I think it was similar for my brother. You're not at a desk reading market reports. You're in the field physically fighting to get a crop in, running on no sleep. And let's face it, no more margin for one more important decision. And in the meantime, while all that is happening, canola quietly comes off $60 a ton from the highs. Oops. Oops, did you get that? Well, that's the cruel part. The window to protect your price opens at the exact moment that you have the least bandwidth to think about it. Murphy's Law. Nobody has the emotional capacity to make a clean marketing call with their boots full of mud. So this morning, good morning, everybody. I see some of you out there, a lot of my favorites. We are going to fix that. You are going to hear from two people who live this, one who reads the markets every single day for farmers, and one who built a farm, sold grain through years like this, and now sees the whole picture from the lender's chair. We are live on YouTube right now. Do me a favor, like this video, hit subscribe, and if you know a farmer who's sitting on unpriced grain, share this stream before you do anything else today. I'm your host, Dan Aberhart. I run Growing the Future, Western Canadian Agriculture's foremost live briefing platform and its foremost AI training platform for ag operators. I grew up alongside a farming operation that today runs over 20,000 acres, and everything that I do lives at growingthefuture.ca. A couple of quick things. The questions can go into the chat. We got a lovely audience this morning. We are recording, so the replay is going to end up at growingthefuture.ca. We're going to welcome interaction all throughout this event. And if someone in your operation should hear this, please share the link now. So let's get to my friends, I call them, and my esteemed guests and colleagues. It's great to rub shoulders with some of the best in the West, no doubt. Ryan Bonnett has been on the show before. He's been advising grain producers on marketing strategy for a couple decades now. He's independent. He's straight shooting. He's no agenda except getting you a better average. Ryan, welcome back to the show.
Thanks, Dan. Happy to be here.
It's going to be awesome. I'm really excited about having you. And our other guest, longtime listener, first-time caller, new to the show, grew up on a farm. And in 2017, he and a buddy bought into a farm at Gravelberg, and they built it from 800 acres to 3,500 over 9 years. 9 years of challenging situations, so he knows what it's like at the farm gate. When the VP role of Farm Credit Canada got serious, he had to make a choice. He sold his shares back to his partner and stepped away. And he has an MBA in farming, which is priceless, as we know, and getting rarer and rarer. So he now serves as Vice President of Products and Market Strategies at Farm Credit Canada. $65 billion in loans outstanding, with $50 billion in farm assets set to change hands in Western Canada over the next decade. FCC is standing at the forefront of the biggest wealth transfer this industry has ever seen thus far. Colin Brisebois, welcome to Growing the Future.
Thanks for having me.
So, quick question just to orient the crowd here. You two drove to hockey together as kids. Who is better and why?
Well, Ryan was a defenseman. I was a forward, so we'll just leave it at that.
Worked actually pretty well. Like, I'd feed Colin, and he popped a lot of goals. So it's pretty good. We won the league the 1 year, and played a lot of good hockey together. Had a lot of fun.
Love it. Yeah, I was fishing for some juicy hockey stories, but I guess we'll leave the locker room talk for later. I wanted to ask how many of you folks, is this a good question to ask? How many of you folks have your 2026 crop still unpriced? Ryan, what set the table for us of where we're at in the marketing cycle here today?
Yeah, we're in the kind of part of the marketing cycle where we generally see some seasonal declines across almost every one of the commodities. I got some charts I'll show later on here, but this is, again, normal seasonal activity. We have a lot of uncertainty going into seeding. Late seeding happens, too much rain, not enough rain. This happens right across North America. This happens in South America too later on in the year. and we generally see prices appreciate right up into almost the end of seeding. There's a few different reasons for that. Again, I'm never sure how many acres are going in, what the quality of the, or what the efficiency of seeding is. So we have a lot of uncertainty at that time, which rallies prices up, but also you don't have many farmers participating and selling at that time for good reason. They're out in the farm, out in the field doing the operational type of focus. So we generally see this seasonal incline up into May into June. And then right after that, it's almost right before farmers are done seeding and they have a couple days of resting to get their wits about them. The market starts turning over right before, and then we generally see some pretty drastic declines into summertime before we see a futures or price rally later on in the year. So this is almost exactly what's happened this year. How many acres are going in? What's the quality of those things? We had this big run up in the last 4 weeks. We've lost a major amount of pricing opportunities. You mentioned canola down 60, $70. Corn is down 80 cents. Wheats are down over $1.20 a bushel. Soybeans are down, soybean oil, like right across the entire complex. So even though this sometimes feels dramatic, it's very normal.
So what's your over under on how many folks would have all of their, how much is your 2026 crop still unpriced? How many would say all of it, Ryan?
26 still all 100% unpriced. I'm gonna pick 1/3. I'll say 33%.
Okay, it's 8%, and 25% have more than half priced, and 33% have less than half.
Okay.
Well, it's asking what crop there. I don't know. But before we get into more of the education and the details and stuff like that, I'd like to get Colin's read, because what's interesting is, coming from working with a farm, being a partner in a farm, experiencing these market emotional whipsaws. What's your perspective, Colin? And you ended up working with Ryan professionally during that tenure at the farm.
Yeah, so it was a great opportunity, I think, to live the realities that I'm sure a lot of the listeners face every single day, right? So you're going through it, you're busy trying to get that crop in the ground, and there's a lot of opportunities that tend to go maybe missed at times because we get busy, we're not focused on it. And so I think as we went through that and experienced that, we realized that, hey, we're only so good at so many things. And so I have strengths, my partner had strengths, and then we wanted to round out that leadership team on our farm with people that had different levels of expertise. And that's where we reached out to Ryan and started leveraging some of his services to give us more confidence in our ability to make better decisions. And I know Ryan will get into this a little bit more, but it's not always about selling at the very top of the market, but how do we get that $1 more a bushel across the farm, because those will have big impacts on that year end number that we see on our financial statements that we all love to see, right? And so this is like a tool in our toolkit as producers. I think having lived it has really given me the confidence in our need as FCC to even support producers more, to either get more experience or to surround themselves with the folks that can help them make better decisions. And so taking that producer lens and then getting to apply it into my role now today, I think has been really valuable, because I kind of lived those sleepless nights, those decisions. Do we sell now or do we wait? And so I know a lot of the listeners, a lot of our customers face those decisions every single day.
Priceless. And it's not just year end, it's homestead to horizon, where that makes a big difference at the end of the line for transitional wealth, which we'll talk about. And it's a big theme with FCC. Listening to you on the Evan Bray show yesterday, that was wonderful. Speaking of tops, Ryan, you have a hit the top guarantee in your business. Is that true? Hit the top?
No, there's no hit the top guarantees. You're hitting the absolute top all the time. You're either lying or extremely, extremely lucky. I would say a lot of people get too focused on that top contract in the market, the top day. And instead of having a mindset around, hey, how do I beat the average or get up in the top 25% on all my executions? People get so focused on that top end of the market. And the more you do this, the more you study, the more you listen to like really smart people. And I don't consider myself one of them, but if you listen to folks that are longtime investors, they talk about these things all the time too. They never pick the top, but what they try to do is they beat the average all the time. And if you look at, some of the more influential investors around the world, any of the big, money market fund guys, the celebrities, I don't want to name drop, everyone's heard of them. They all talk about having a system and having proper strategies, proper goals, and executing on those goals. And never one of them are saying, I'm finding a way to sell at the absolute peak. None of them say that. Even the best investor in the world says that he's not able to do that. So I would say don't put that impact on yourself or that expectation on yourself. But the big thing I always drive into people, let's beat the average. Beat the average.
That's a great segue to this poll. I'm extremely curious, and I know I need this in my trading. Do you have a written grain marketing plan, and do you follow it, or do you have one but you don't look at it, or do you want one, or you just make it up as you go? Because I know, Ryan, you're good at gathering information, and I know that you're good at developing a system and sticking to it, and that's why you're a pro that can help people that maybe aren't wired that way or are busy in the field. So, but let's talk about a question that came in from Harry Siemens while this poll is loading here. What 2 points besides discipline? Is it anything besides discipline makes the marketing system work best for farmers? Or is it like real estate, location, discipline?
Yeah. So really good question. So the first is, okay, so discipline, but that's a very broad general word. What the heck do you mean discipline? Okay, so sticking to your plan is one of those things. But then I like this poll that you have out here. And we generally say, what's the plan? And I've heard folks say stuff like, well, when it gets to this price, I'm going to sell this amount, or this price, we're going to sell this amount. I used to have a plan kind of like that back in 2021, and we had that huge run up in the markets and so forth. And we ended up selling more earlier than we'd have liked to. So I've since redone that plan to figure out how do we capture as much of the upside as we can and avoid as much of the downside as we can. So sometimes when it's just like, hey, at this price, I'm going to sell this much. My question is, okay, why at that price? Why do you think it's not going to go higher or lower at that time? So it's more like what I would portray to people on this one is have a set of parameters that you'll use to execute or not execute at any given time. Because I'll give you an example what's happened this past year. We had a big run up from December all the way to a couple of weeks ago in canola. And there's only about 2 or 3 times in there that I would say the momentum of the market changed, which would be probably a better time to make sales executions versus on, like, say, round numbers of dollar amount per bushel available to your farm. So I'd say having a plan is a first step, but then like really diving down into how do you capture as much of the upside as you can in those plans.
Colin, what's your perspective on this? Did you have a written plan, or did you hand it off to a professional from FCC's chair? I'm wondering how many farmers have a plan, whether it's for marketing, or you talked about how many farmers have a transition plan as a percentage yesterday on the Evan Bray show as well.
Yeah. Well, yeah, for sure we had a plan. And I think discipline, to Ryan's point, can mean, different things for sure. To me, it's, do you understand your cost of production? Because that's going to vary a ton as well as you go into your plan. And we would have saw that even this spring, if you had pre-bought your fertilizer versus having to buy it at, some of the prices once we had some of the conflicts happening, around the world. And so understanding your cost of production, understanding, hey, what does it cost me to on my farm? And then if you have a target, so let's say you target $50 or $75 an acre as trying to have a profit margin there. Well, then my plan's going to look different than, I look at the list of all the attendees today and, know lots of people on the call, but like everybody's plan is going to look different, but you need to start with understanding your numbers. You need to understand your cost of production. Everybody's fixed costs, variable costs are going to look different. So to me, the discipline is you start with the plan going into the year. And then do you have the ability to execute on that plan? When that price hits that mark and I can say, hey, I'm going to make $75 an acre net on my farm by selling my canola here, that's the discipline. That's the execution that it takes. And so again, I think it starts with knowing your numbers, surrounding yourselves with people that can help inform you the best possible. But the hardest thing I found was like pulling the trigger, because it's like, wow, what if I pull it now and I just miss out, on 2 more cents on my lentils or 25 more cents on that durum crop. So again, it's not a perfect science, but being informed, being intentional about what you're trying to achieve, and then, pulling the trigger when you need to.
Yeah, I love that. John DePap, you're on the call. I wondered if you want to come on and add your 2 cents if you were so kind, if you're able and willing. But I'm going just put your thumbs up or send me something in the chat there, John. I'm just going to make sure we don't have stuff coming in the chat here that I'm missing, but I think we're good. So do you have a written grain marketing plan, Colin? How many folks do you think said yes and I follow it versus how many folks said no, but I want one?
Well, if we go off numbers of transition plans, so we say like our numbers tell us 88% of people don't have a written succession or transition plan. That's a pretty complex thing to figure out. Hopefully grain marketing is a little less complex than that. So I'm going to go 50%.
17% have a plan and follow it.
Pretty close to the transition numbers there.
I was going to give you that hint, but and 0% said yes, but I rarely look at it, and 42% said no, but I want one. Well, you're in the right place with the right professionals, I'd say. But
Hey, Dan, can I jump in on something just to Colin?
Please do. Yeah, please do jump in.
So that anxiety that Colin just described there, that, hey, today might be the day, but what about tomorrow? 2 cents up, 2 cents down. I find that is a big thing that almost everybody deals with. So that's whether it be called seller's or buyer's remorse. Okay, so generally, and this is what I try to say to folks all the time, anytime I inboard somebody as a client, I'm like, what is it that makes you sell that particular day? Like, why did you sell on a Wednesday versus the Thursday or the next Wednesday? And I try to hone in on that with folks, and it ends up being, well, I don't know, the grain buyer sold it, I felt it, all these type of things. And since there's not like a set amount of parameters, if you don't have these set amount of parameters that you follow, there's no way you're not going to have seller's anxiety. Okay. The only way you won't have seller's anxiety is if you pick the right day and it tanks 30 bucks a ton the next day, you're going to feel great. Okay. But that doesn't happen that often. I can tell you this side. So I was the exact same way. I'm not just a guy that suggests people to do something on their farm. I actually trade my own book. And luckily somebody said to me 18 years ago, well, if you're so smart at this, why don't you make money at it, Ryan? And it was one of those deer in the headlight looks. I'm like, you are absolutely right. I still work with the guy today. But since then, I picked it up and said, all right, if I'm going to suggest farms to do this, I better be able to make money on this stuff myself. So I've been over the last 18 years trading my own book in terms of commodities. I don't trade stocks. I trade agricultural commodities. So over the pitfalls of winning some, losing some, getting my butt handed to me, making some big wins, you start figuring out, oh, I have that anxiety the same way. I feel what the farmers now feel when they're selling their wheat today or their canola. So then I start figuring out what would make me feel better about executing this, even if it goes against me the next day. So I start putting a set of parameters that I learned from other traders and, a couple of those things. I say, if these things are true, I execute. And even if it goes against me, I don't feel bad because I stuck to these execution points. So again, I'd say this to farms. So like Harry asked a really good question. A couple of things I'd say in there, a couple of my parameters, is it an above the average of the market? And are we in a seasonal high time would be two of them that I would say that you could follow. There's more to it than that for me, at least. But again, having those parameters that you set as part of that discipline, that's like, all right, even if it goes against me tomorrow, I'm not going to feel bad about it because these 5 things were true.
And you're separating the system from the outcome. And really, you want to grade yourself on how well you followed the system, not what your outcome was, because you cannot determine the outcome just like folks seeding with the plane for 15 bucks an acre. Yeah, that's something you can't plan on, but you can, well, you can try and plan for it, but you can't control that outcome. Harry Siemens is saying, I remember some years ago interviewing a farmer who was hauling canola to Bungie and Altona. I remember him saying that each load of canola he hauled that day was priced significantly differently. Is that a good sign? Are we going to get into basis today, or what's the...
I hadn't really thought about doing basis here today, but I'm not sure if I could say if that's a good sign or not, Harry. I'd have to know more about it.
Mhm.
It just depends on how that particular guy executed. It might have been he took a basis contract and he sold at 3 different increments, and then each one of those increments on that basis contract was a different day that he priced. Maybe. Have to know more about it to be able to answer that properly.
He's a man who says he does not know when he does not know, folks. Noted. I think that you had a number for me. That's the good old 80-20 rule. You said You told me how many farmers had acted or on this 760 to 790 run. What's the percentage there of folks who did nothing?
If I had to say, looking back, I'd probably say something like 65% of folks probably weren't able to execute at those high points of the market. They probably executed something on the way up, maybe on the way down, but in those top 10, kind of 2 or 3 days, it would have been probably really tough for guys to be able to execute. They're in the field doing their farming job, exactly what they're paid to do. And on those days, there was a couple technical indicators that would have said, hey, you should sell. But if you don't know what those technical indicators are, you probably missed that.
And what are you two? Let's just go with Colin quick. And I don't know, you've been talking to farmers and still connected to the farm. What are you two seeing out in the countryside? Because I hear the crops are looking pretty good. Colin, what's your take on the season thus far and how that might affect the market? And then we'll go back to Ryan.
Well, I think it's really variable. Like I was talking to some folks in Edmonton yesterday. It's super wet. Obviously, eastern part of the province is super wet as well. Southwest Saskatchewan, we're optimistic, but we're only 2 weeks away from, needing a significant rain. So it is variable. And I think that goes back to, understanding your specific position or opportunity in the region that you're in. And so, yeah, I think it's been variable. And it's not different than most years. Like most years, there's always an area that's too dry or too wet. And so I think there's lots of optimism. I think there's also lots of opportunity, right? To Ryan's point of how do we get better at maybe making those decisions at the right time, even though it's the busiest time of the year. And so, I think FCC's position on this is also like, how do we have conversations like this? How do we identify those that want a little bit more help? And, we want to be more than like just a capital provider as well, right? So we do a lot of knowledge and advice piece. And we actually trial run a couple of cohorts last year with Ryan because we had such significant interest from producers that said, hey, like one of the main topics that we'd like your help with is on the grain marketing side. And so what we did is we leveraged, a lot of Ryan's platform, sponsored some seats and had some of our customers go to that. And I don't know, Ryan, if you have the numbers, but in the few that I continue to text and stay in touch with to be like, hey, what's your experience? They went through that cohort and many of them are still leveraging Ryan's services after that original cohort. So I think it talks to the value of what they've seen. They made a few trades, they got comfortable with it. It can feel overwhelming, but having someone get that trading account set up, help you make that nudge on that first one or two sales, and then all of a sudden it becomes a little bit more of a discipline or something that we just do on a regular basis as part of our business. We see an opportunity for FCC to help support producers get to that spot where then the professionals like Ryan and other great people in the industry that do similar stuff, they can continue to work alongside those producers. But for us, it's giving them that little nudge and getting them into those rooms to experience what's possible.
I love that. Ryan, did you wanna touch on that a little bit?
Yeah, I mean, thanks to FCC for sponsoring that. And I have, hired and grown my book from having, folks attend that. I would say the biggest thing that I get after chatting from a lot of the folks that attend that is, how come no one's ever shown me this stuff before? Like a lot of that stuff seems excellent after you show it to me. How come my grain buyer or somebody else hasn't showed me this before? And a lot of the times it's not either relevant, or the folks that you end up talking to aren't nerds, deep nerds on this stuff like I am. So sometimes a lot of this information that we'd use as analysts aren't exposed to farmers, or, like I'll give you an example. I'll show people like spread trades and ratios, and I got one in my presentation here. Like it actually is a really good tool to help you make a decision, but most of the time you're not hearing and seeing about these things unless you talk to some of the more heavily traders, the heavily high-end traders of the marketplace. And there's just not that many of them, and they don't have time to show all that stuff to growers all the time, or it's completely accessible through a lot of the trading platforms, but just no one knows where to look for it.
Yeah.
There's a lot of these things that are, just not as readily available to folks. No one sees it, and this is what I've kind of known on or figured out on this side. There's not that much interest in this stuff. People don't sit down and read the 20 or 30 pages a day like I do. I find that really interesting. Not everybody finds that stuff interesting. So, and if you don't find that stuff interesting, that's fine. You don't have to read it. Have somebody on your team that does find that interesting, because that is your top line revenue. Those 20 or 30 pages a day with corn trading 15-cent range or so forth, that might sound boring. That's the driver of your top line revenue on your farm.
You know what that makes me think of, and Harry, you'll know what I'm talking about, tile drainage. And people, when I was in the tile drainage business, people asked about doing it themselves. And I said, only if you love it. Because in November, when the ground is freezing and you're hitting rocks and you're trying to put stuff in on grade and the water's coming into the hole and you're 6 feet in the dirt and you just wish you'd never ever thought of this idea. Because it's a tough business, like trading. Everybody has a plan until you get punched in the face, and you've experienced it. Colin's experienced it. The audience has experienced it. Until you live that, you don't know what you're getting into.
100%. And like that would even be an adage across almost every discipline. Like, I'll give you an example. I was talking to a cattle farmer the other day, and we talked about the ins and outs of cattle farming. And I'm like, yeah, man, I think you've got a pretty good optimistic future. And he talked to me about BSE and upsides and downsides and all this thing. I'm like, you're forgetting your number one competitive advantage. And he said, well, what's that? I'm like, you love cattle. You love them. You go out, you
Right.
love cattle.
Right.
And I talk to farms a lot of time. They love their machines. They love getting in there, and they, blow my brain out in terms of all the, mechanical, like almost mechanical engineers at time. And I'm like, that's boring to me. But then I see them glaze over when I talk about like the soybean corn spread.
Yeah.
And I just realize it's like, hey, have people on your team, or do the things that you really love, and then find people who love doing those other jobs as well.
Do you want to get your presentation going here? You want to share some specifics, and I wanted to ask you too about what you were seeing in the countryside and how that might affect the market. But Colin, does that resonate for you, that you need to have a love for it, or hire that out in a modern day farm where you need to be proficient at all these disciplines because all the money's on the line? You were talking about $1 a bushel. Ryan confirmed that's easily one way or the other, and that can make $250,000 difference on your farm in a year. And what does $250,000 a year do over 10 years?
I think it applies honestly to any business. Like if I think of even my role in the corporate world is I have a lot, different areas of responsibility within my group, but that doesn't mean that I'm really good at all of those things. So again, it's about surrounding yourself with the quality leadership team that complements maybe your strengths and your weaknesses in a way that helps you become a good, solid team overall, right? And so that's no different than how we would want to apply it to a farm. We just maybe don't get to hire them as an employee, but it doesn't mean that we can't engage their services and make them an extension of our leadership team or our management team on our farm. So I think it's, again, back to understanding what we're good at. To Ryan's point, what do we love doing versus what do we not love doing? And if we don't love doing some of those things, that's okay. But let's find someone that does, and then let's leverage that and make sure that it's a benefit to our overall, whatever our objective is that we talked about at the start of the call today.
Yeah, know your objective too. I think that's important. Know what you want to achieve and what's reasonable to achieve before you start dreaming about getting rich trading. 'Cause I know somebody who might be thinking that right now. I want to get rich trading. Ryan knows that. I always confess to him. But Ryan, before you
conversations, don't we?
yeah, we do. We end up talking for an hour every time. But are you going to share your screen there, or is that extra money to
No,
send over checks in the mail?
1 second here.
I didn't see it unless anybody else sees it, but I also wanted to ask you, Ryan, what you're seeing out there for crops, and you're like, oh, there's a little bit of a monster crop out here right now.
Yeah, what I would say on this side is like variable, as Colin was saying, but the overall standpoint I have to be here, and I'm very sensitive saying this, is across Western Canada, we would have adequate to abundant moisture. And I know what that means for some folks, too much moisture in certain areas, those type of things. Some areas that didn't get seeded, crop went in late, very stressful on that side. Totally get it. But what I would say to most folks is generally abundant moisture doesn't lead to production shortfalls and might lead to quality shortfalls. So generally, like right now, we're set up to grow a lot of bushels across Western Canada. There's always issues in some areas. Some pockets aren't going to do as well as others. But right now, with this amount of moisture, you're generally set up to grow a lot of bushels.
What about the rest of, like, how is the U.S. doing? I heard they were in drought. And then what, do you look a lot at the fundamentals, or are you just a chart guy?
I look at both. In my opinion, you have to look at both. So U.S. Western, winter wheat belt, worst crop they've had in 20 to 50 years. Yields are coming off here right now, very disappointing in those areas. Um, Kansas City wheat is probably, winter wheat is probably going to be one of the lowest productions they've had in a long, long time. But then when you get more east of that into the U.S. Midwest, crops are looking pretty good. Adequate to abundant moisture once again. Folks are already talking about above trend line corn yields, above trend line soybean yields. Again, it's very early, but if you start stacking up all the data that you'd have at this time of year and any other years, we're high 60% on corn and soybean, good to excellent ratings, which generally means minimum trend line yield to above trend line yield so far. Now we still got a lot more time to go. We got, corn's very susceptible to damage in July, soybeans are in August. So when you look at the US, they're kind of set up like we are in Western Canada here, pretty good to abundant moisture concerns outside of the Western, winter wheat belt. So again, pretty good looking crop so far.
Okay, how do I make money?
All right. So can you see my slide deck now?
Yep.
All right. Okay. So the first things I want to go through with folks here is, again, I talked a little bit about those seasonal patterns. Okay. And I'm going to show you what a seasonal pattern chart looks like. Okay. So this might sound busy, but I'll go through this one. The red line is the 5-year indexed average of what the tendencies of the canola market are. The black line is a 15-year and the 30-year is the pink line. Sometimes the 30-year, I don't really use that one because, say, it's 30 years of data. There's a lot of different things that happened 30 years ago than now. But the thing I really want to hone in everybody in on is, just as I spoke about before, we have this rally all the way up here into kind of this May, June timeframe, right when you guys are busy as heck in the field. We get spikes up here, peaks up here, and then we work our way down towards harvest time. This is not rocket science. You guys probably feel this or see this, but you don't have it on a chart like I do. So the thing I try to compel people to do is there has to be at least one portion of your selling that has to happen, in my opinion, second half of May to at least the third to maybe fourth week of June.
This is
And
so compelling, Ryan, because this is just probabilities. This isn't trying to be a chart whisperer. This is like, hey, 80% of the time we're high at this time of the year. We're just maybe
exactly
not
right.
this year, but
Here's
interesting.
the thing I want to hone in on to you guys on this one. I'm going to get this is what catches people into that seller's remorse. Don't get so fixated on the day. Try to figure out the right month to sell. And no matter what day you pick in that month, you're likely going to be better than if you sell it in October. Okay, so then you get really fine tuned like what I do to try to pick that day and that hour. And I'm always trying to do that. I never get it perfect, but I get it pretty good. But if you can be selling a portion of your grain in this time period here, kind of May through July, you have to be able to execute at least 20% of your sales at that time if you ever want to beat the average.
This
Okay?
seems so simple and obvious, and yet I bet a lot of people don't have this chart in front of them.
I've made a lot of money myself trading this chart alone,
Huh.
shorting canola this time of year.
Respect, bro.
All right. So here's that trend. And again, always trends can change, but this is the averages. Now here's the run up on canola right now. We've had a great run, great run. Oh, this is right in that June time frame, almost identical to this one. And now we're starting to head our way
Shoot.
down a little bit here. Okay. It's going to get a lot more visceral in the next couple slides I show you, but here you go. And, this is the seasonal tendency. The next thing, and this is the summer selling window, we generally do see some like little spike in July from hot weather or it's dry, or maybe this year it's just going to be the crop is delayed. We're probably going to get another, pop up here to see if we have another opportunity to sell. And if that's the case, you gotta get comfortable being uncomfortable or do another thing like buying put options to be able to secure something up here.
Okay, wait a minute. So you're saying it's not a completely binary decision, buy or sell. There's nuances and options, pardon the pun.
Exactly right. Exactly right. So if you are one of those folks, and rightfully so, maybe feel very high degree of anxiety selling something before you have it, then what I would say is that you need to become comfortable with buying put options or having some of these risk management strategies. Maybe it's a collar. I spoke about that on a previous podcast, Dan. There's ways to do those things, or even just have the ability to buy put options, which are effectively price insurance.
So is one of your mantras, when in doubt, split it out? Because I've heard that, and I find it's much easier just to make a decision like that than it's like black and white.
I don't use that one particularly myself, but there's times when I'd be like, hey, execute a physical sale, and there's other times when I'd be like, hey, let's take put options. And it really drives down to the person, their risk appetite.
Because just to clarify for anyone that doesn't know put options, that's buying essentially buying insurance. If the price were to go down, that put option increases in value relative to
Exactly.
the price drop.
Exactly. That's
But it's a
exactly.
small portion of the price that you would pay, or if it goes up, your put might expire worthless, but you've got way more upside. You just protected it.
Exactly right. So effectively what you're doing there is again buying price insurance. You're effectively selling your grain at these highs without selling your grain. Okay, you're securing this price right now without the contractual obligation to deliver that grain to the elevator.
And are you able to see who's buying puts that would be in the know that you can gauge decisions on?
Well, I can see some people buying puts, but it's generally you get to see the volume on the puts that people are buying and you get to see some of the overall transactions, but you don't. I couldn't tell if Dan Aberhart or Colin Brisebois bought puts on this particular day, but I can see the volume of the amount of puts that are out there.
Yeah. Interesting. Are
Okay,
you a
so
chart guy, Colin? Does this stuff just tickle the right bone for you? Does it get you excited?
Well, I probably not as much as Ryan, but I do like a good chart. And probably what I was thinking through this, because I've seen this chart for sure. What's interesting, I've also seen a similar chart with fertilizer prices. And the weirdest thing is it's funny because the best time to sell your commodities, and Ryan showed this, is in the summer selling window. And the best time to fill up your fertilizer bins is also probably as you're pulling your last load out of your fertilizer bin. And so again, I think it goes back to like understanding the charts, understanding the opportunity. And that's not going to be true in every single year. This last year, maybe not so as much, but to me, it goes back to the power of working capital, right? And if you have working capital, you have the ability to pull the trigger to buy your fertilizer in the summer for your next crop year. You have the ability with some working capital to maybe make some decisions around selling a crop that you haven't even put in the bin yet. Again, there's different ways you can risk manage that. There's revenue insurance, those types of things. But the power of working capital allows you to maximize the confidence you have in making these decisions at the right time of the year.
And I'm going to triple play on your thoughts because I'm thinking one of the main things in play here is your decision making working capital. So just at the time when they got you on the fertilizer and they got you on the grain, that's when you're probably lowest, having survived a bruising spring, and now you have to make big, clear-headed, mature decisions with your big boy or big girl pants on. That's tough. So you need somebody saying like, "Did you do that? Did you do that? Like I told you. Why didn't you do that?" And then maybe in the third year you did that because you had somebody say, What are you waiting for?" Hey, Ryan.
That's exactly it. Generally, the best decisions will happen when you're most uncomfortable. That's effectively what it's going to end up being. I've had many times when it's like, hey, I think it's time for you to, execute a wheat sale. Well, I'm just not quite confident in my crop yet, Ryan. That's exactly when you should be doing it. Here's why. Here's the chart. I know you don't feel confident on it yet, but here's again, this is a very visceral chart to me. It's like, man, I sure wish I had sold wheat a few weeks ago, or taken a futures position. And then this is what we always get caught up on. This year is going to be different. Not this year. It's not going to happen this year. Lo and behold, here's the wheat chart. Almost identical. Boom.
That hurts.
Down to those levels,
Oof. So now you're sitting here, and if you haven't sold, I guess I could go back to our poll numbers. It's like, cool, man. Like, and then doing the math on everything. Although I guess nitrogen has dropped $500 a ton magically, but combines still haven't come down.
Great time to fill the bins.
Yeah. I don't know if bins and new shops and Yukons and X9s have come down with the check, but
those come down slower. If ever.
You mean never come down?
That's exactly what I mean.
That never have and never will come down.
Slower as in 0 mile per hour coming down.
Yeah.
So carrying on in this one, here's a corn chart. Okay, but this year's going to be different.
That's crazy.
There's corn.
That's too spooky.
Too spooky. Oh,
Well,
so
and when you're getting to the double top there on corn, it's like, what are you waiting for? You think your all-time new highs? This is where you're thinking like, oh no, it's going to be higher, all-time new highs, and I'm going to catch that, and that will feel so good.
that's exactly it. So like, so even like, that's a good point, Dan. So here's a double top, but there's other indicators that you can use.
Yeah.
And this is an oscillator on the bottom, that you can use to start helping making these decisions. This is part of what I do, as part of my, magic sauce. I'm not the only guy that does it. There's other folks I know that do it well here as well too. But to that marketing plan, these are some of the things that you'd end up looking for. And sometimes it's not so much just a round number on a chart or a round number that the elevator posts to you. There's other mechanisms that you can use to help you make these decisions to make you feel better about those decisions.
Well, because a lot of people are looking at the same information, for example, with the RSI, it's a tough thing to paraphrase because I'm not that scientific, but it's essentially how much is that daily price moving relative to the amount of days it's moved up or something to that effect. Like it's the strength of buying relative to time. And when it hits the top like that, everybody's looking and saying, hey, it's kind of overbought. Like if you imagine an auctioneer like running out of steam, if you're at an auctioneer and he's trying to get that last, 10% higher and the crowd's getting quiet, that's kind of where we're at when that RSI is turning blue, right?
Exactly right. So, and here's the thing, there's secondary ones after that where it'd be like, hey, we've made higher highs, but there's fewer buyers at those higher highs than there was at the previous highs. That is also a momentum indicator. That's saying the momentum of the market is slowing or shifting. And if you don't know what you're looking for there, it's easy to get caught up and it's just going to keep going. It's going to keep going, going to keep going. Oh, it's going to come back. It's going to come back. It'll come back. You think it's going to come back? What do you think it's going to come back, Ryan?
Yeah. Yeah. Well,
It
you
happens
have
every,
those conversations with everybody all the time, eh?
so again, here's soybeans. Holy smokes, here we go. And, we've already begun that side as well too.
So, we're in a bit of a rally here for soybeans
Yeah, we've got a little bit of some momentum. Sounds like there's
retracement.
uh,
That's a
Sounds
nice
like
candle.
there's some Chinese business happening here, both canola and beans here earlier this week. There's some rumors that some of those Iranian dollars, they're going to go buy U.S. Agricultural products. And
Oh
you can
man.
get caught up in this news by no means. There's always going to be some other headlines, and there's especially with Trump in the White House, there's going to be headlines like crazy. Sometimes you have to put the headlines aside and watch what price action does, because honestly, the headlines and news opinions don't matter unless people put money behind it, unless it actually impacts prices.
Well, and looking at your annual averages relative to what happened this year, who knew what war? Like it was almost picture perfect this year.
Exactly. Here's soybean oil. Okay, big side. Okay. Oh, I don't have that chart here, but again, soybean oil, the exact same type of thing. We start working our way down, into like say later on part of harvest, or later on of summer into harvest, and then after harvest we start rallying again. So the big key thing here, and Harry asked it in the charts before, is there a couple things you can do. One is have enough grain sold at May, June, July, or early July timeframe so that you don't have to sell grain September and October. There's a lot of guys that get forced into selling grain at that time. Part of my goal is that hopefully we've planned enough with my clients so that you don't have to make any additional sales calls at that September, October timeframe unless you have such a huge crop that you gotta move something at that time. And that's
Okay, so it's logistics and it's cash flow as well.
exactly right.
So you know all
Exactly.
your clients' logistics and cash flow as well, then roughly speaking, or
Pretty close. Most of the time, I kind of expect them to be able to tell me when their cash flows are. Most guys, and I'd love to say that they hone in on this, but a lot of guys are doing a much better job than even 20 years ago tracking their cost of production. It's not perfect, but it's better than it was. And cash flow needs is always a conversation we end up having. But a lot of times, I kind of expect people to be able to handle those things themselves.
fair, fair. Good to know.
Okay, so these are seasonalities. These are type of things that that make you try. I try to get people to help them feel better. But anyway, here's again the seasonal chart. I had these a little screwed up. Seasonal chart on soybean oil, and we're working our way down here again. It's scary. Each one of these markets this year are following these seasonal trends. But no, this year's going to be different. Is
Where
it?
was the seasonal on soybean oil? Because I seen a chart the other day. Um, I seen a chart the other day that was really building some formation of soybean oil going way down to the previous lows, and I thought, oh. And then I thought my first thought was oofta, and then my second thought was like, oh, I should short that. I could do that on interactive brokers, but
Yeah, like the biggest thing I'd say to keep in mind on soybean oil and canola this year is with all these new biofuel regulations coming out of the US, this is changing the ground underneath us in terms of like vegetable oil demand. The amount of soybean oil they're going to have to use, or vegetable oil in general, they're going to have to use to produce the amount of biodiesel that they want in the United States does give us a higher floor in these markets than what we're probably used to. Now, the thing I would compel everybody to remember is these are policy-based demand factors. And what always scares me on policy-based demand factors is that policy can change. There's already talk in the States about the how expensive it is right now for blenders and diesel blenders to be able to comply with these new regulations. So something you might hear in the future is U.S. lobbyists talking about how expensive it is to be able to fill their biodiesel demand that's been set forth to them by the government.
yeah,
So
we're gonna do that on an upcoming show. I teased that with you. We got Sean Wildman and none other than Quick Dick McDick talking about the Strathcona renewable diesel project that could take 10% of the crop. So where does that fit in on the charts? You had lots of thought. You said, "Oh, I'd love to be on that one, Dan."
yeah, yeah, I'd love to hear more of what they say. But like right now, all these new crush facilities in Canada and all the expansions of the crush facilities, they were built to be able to crush more oil to be able to get that into the U.S. biofuel, biofuel industry.
What are
So
you seeing on that, Colin? What are you? Is that part coming to onto your desk at all, or?
Well, I think part of the national food strategy that the federal government just launched a couple weeks ago, there was a big focus on domestic processing, and I know that goes beyond just like canola crush facilities. But if I think of the opportunity for the industry, is whether we're value adding lentils or canola or pick your commodity, I think the more we can do that at home in Canada starts to then help maybe bring those floors up like Ryan talked about versus just like exporting, raw commodities, which is, been a bit of, what we've relied on with the US market being so close to us, those types of things. But, we will export $100 billion worth of commodities every year in Canada. And so how do we value add more of those here at home? How do we do more of that here so that we're creating those jobs? We're increasing the GDP, that economic benefit is staying in our rural communities and our communities across Canada. So I think that's the huge opportunity in front of us, is to continue to invest there to, slowly tip the advantage in the hands of our producers, right? And so that's we often talk about a big opportunity for the industry right now, and that has a bunch of different layers to it for sure. And I know we're talking about grain marketing today, but it all kind of comes together weirdly at the end of the day, right? Is building a more resilient industry, relying less on exporting raw commodities. I think there's just a lot of opportunity here as an industry moving forward.
100%
Okay, well
agree.
that yeah.
I
So
could add anything on
we're
that.
go ahead, Ryan.
I could add anything on that. I would like this is the thing I try to compel to any government, agency that would be hearing this. Let's have the courage to build these things.
Yeah,
Let's
yeah,
take, unfortunately, there's a lot of red tape that happens there. Let's have the courage to build these things. It's not like this is what I'd say to adding to Colin. It'd be great for producers, but it'd be great for our general communities and a general like economy of Canada. Like we create jobs, and it'd be homegrown jobs.
amen. No, I love that. Where are you at in your presentation here today, Ryan? We got 12 minutes. I kind of
I
or
got
11 minutes. We want to
few
bring
other
it home.
few other quick slides. This
Okay,
is one that I really try
hit
to
it.
hone in on everybody. This
Yeah.
one really helped me. And if you ever hear me speak, we say this every single time. We get tedious and ad nauseum. Okay. So this really helped me in terms of my marketing ability and trading ability over time is if you are bullish or bearish, that is completely fine. You can pick whichever one you are at any given time. But the tougher thing this is if you're bullish or bearish, defend your answer. Okay, so I would always say to somebody, if you're bullish, okay, no problem. Tell me why. And they generally give me a couple pretty good reasons. Crops late, we're gonna have a late harvest, those type of things. Okay, that's fine. Sounds good. Okay, now how much price will that change on the market? Okay, so now quantify how bullish you are. So if you are bullish canola now, are you bullish to 800 bucks a ton, 850, 900, whatever that is from today's price? Same type of thing on the other side. If you're bearish for whatever good reasons, no problem. Now price how bearish that is. Then all of a sudden you start formulating a much better opinion, a much more drawn out, built out opinion, and then you can actually start making strategies from there. Okay.
Love it.
But a lot of times, a lot of people are endlessly bullish. Okay. I'm bullish. I'm bullish. It goes to 700, 800, whatever. And even at 800, all these indicators are saying we're tiring out. I'm still bullish. Why? Because I'm bullish. I just say, hey, have a better, like have a more drawn out reason. And if you are bullish, are you bullish another 50 bucks, 60 bucks, whatever that is? And the exact same thing the way down. Oh, we're down. I'll give an example. Corn now, it was at 430 to 440. Oh, it's going to go to 350. Maybe not. Are you really that bearish after we dropped 90 cents on corn? Let's think about these type of things. So again, how bullish or bearish are you? Defend your answer, quantify it. Now you can make strategies. Okay, so back on canola here. Here's our current chart. These are seasonals. You know we're probably going to work our way down into harvest unless we have an absolutely terrible July and August. I'll give you that. But let's say we don't. We're probably set up to have a little bit of a downtrend here into harvest. So how do you actually take advantage of that without having to sell some of your crop if you do feel anxiety about that? And I'm going to hammer this, and I know a lot of counterparts that do what I do say the same things. Find ways or learn how to execute put option strategies. Okay, so whether you're buying a put at the current market or you're doing out of the money puts, I've spoken before, a lot of my growers end up doing collars for certain reasons. Have an ability to learn how some of these put option strategies work and know when, what days and what prices you want to be able to execute those at. Invest in some time to learn these things.
Amen. Whew, the summer selling window. The summer selling window. Well, we're getting close to the end here. Quick one, kind of on the topic that we're on. Thank you, Ryan. I appreciate you. Harry Siemens is saying, I'm all for building up our processing manufacturing, but isn't it also important to make sure we don't keep poking the people who then need to buy our finished product? I'm not sure what that looks like or who wants to comment on that, but
I mean, of course, we want to keep our current customers, but like I would just say, having more value added industries for us, I think is going to be good. And I'll give you an example. The US, with all their additional soybean crushing that they've invested in the last couple of years, they've exported more soybean meal than ever this year and rapidly. So they're essentially like consuming their own soybean oil in their biodiesel industry and food industry, all those things. Now they're exporting a lot more meal than they ever have. So the demand is still out there, even for that processed product. So just because we've always just shipped canola over to said customer somewhere, well, maybe we can't ship as much canola there, but why couldn't we ship more meal there?
should be running for office.
I think the only thing I would add there, Dan, is I think there's a big opportunity to listen to the needs of the end user. And so there's, whether we're exporting to the US, we're exporting abroad, pick your country. We're essentially exporting raw commodities to those countries so they can value add them into the products that is most unique to their culture or the demand that their consumers have. And so I think there's an opportunity as we're going to build out domestic processing here in Canada is how do we understand what that finished product looks like to the end user and how do we adjust that so that we're shipping the commodity that they want as a finished product. And so, listening to the needs of those that are going to be buying our products is essential as we move forward here, right? So I think there's a big opportunity.
I really like your approach, and that came off with Evan Bray too. You're talking to folks. So, Colin, can you give us a little bit of the context of the three pillars that you're working with at FCC, Knowledge Advisory, Support, and Capital Solutions, and how today's conversation fits in? And in the meantime, I'm going to launch a poll here. Who here is dealing with FCC, or who would like to that maybe is not? Let us know what you think kindly, please. Colin, take it away. on
Yeah,
your.
thanks, Dan. Well, I hope this one's better than 17%, but I guess we'll wait and see. But here, I think I've been with FCC 20 years, and I think that says a lot about an organization when you have a lot of people that stick around for a long time. But I think what connects me most to what we get up to is for sure lending money and providing capital to producers, processors. It's super important part of what we do. But the role we want to play is like, how do we become a long-term partner? So before we've ever lent a dollar, are we providing them the knowledge they need? Can we provide them the connections to folks like Ryan and others? And then on the advisory side, what we've heard from customers is, hey, there's a whole bunch of things that I could use a little bit of help on in my business. And that's not meaning that these businesses aren't successful and thriving, but progressive producers, they are always looking for opportunities to get better. And so the best way to get better is to surround yourself with people that either have the scars and have been through it before, or that can provide that edge to round out that leadership team. And I know I saw Todd Andrews on the call too. And so, we're doing a lot of work with Maverick Ag and helping customers get connected to the experts like Todd and Evan and others that can help them round out that business plan, that risk mitigation plan. And so, grain marketing is a piece of that. So overall, for sure, knowledge, advice, capital, that's our three pillars that we want to focus on. And we know by providing knowledge, providing good advice, helping producers become more profitable, more resilient. We talk about sustainability a lot, but sustainability is, how do I become more productive, more profitable, and more resilient over the long term? And so we can do that with all three of those pillars. And we can't do it by having all that expertise in-house. We'd never be able to hire enough smart people, but all those smart people exist in the industry. And so that's why we've strategically decided to build strategic partnerships with folks like Ryan, the folks at Maverick Ag, and others across the country, so that we can put our customers directly in front of those that can help them solve those problems and take advantage of those opportunities.
That's a great pitch for Farmer Coach, our friends at Farmer Coach. Evan is our family farm CFO. I've heard him dishing out wisdom often on their advisory calls, and a good friend. And yeah, find the right people that you resonate with that can help you succeed. And the other thing this translates into that you could touch very quickly on, Colin, is transferring that wealth. It has to be done. We have to keep going. We have to go forward into the future. There's $50 billion. It's going to take a lot of expertise. It's going to take a lot of capital. It's going to take a lot of wherewithal to keep it rolling on the train. Western Canadian Ag, that's what you guys are focused on. You were talking about it yesterday.
Yeah, so the capital is a huge opportunity for sure, Dan. And what I think we maybe don't talk enough about is who's replacing the decision makers, who's replacing the expertise, and not just farmers that are going to retire. The average age of a farmer now is 62. And so 40% of all farmers and farm operators by 2033 are going to retire. So who's going to replace that knowledge on farm, but who's going to be the next accountant, lawyer, data scientist, agronomist that we need to come into this industry? And so we got to talk about transition at the family farm for sure. And then we got to talk about how do we attract the next generation of talent and skills that we need for this industry. And that's going to look different than what it was 20 years ago. And so that starts with all of us talking positively about the industry, the opportunity that the industry has, and creating a story where people are like, I want to go build a career in agriculture because it's exciting. There's lots of cool stuff going on. And so, we can get caught up in the short-term headwinds like anyone else can. But I think if we really step back and look at the opportunity in front of us, and I know a lot of your people that have joined the shows in the past few weeks have talked about the opportunity, but I don't know if there's been a more exciting time to be a part of ag. So super excited to be a part of it with all of you.
Definitely. Okay, well, big reveal here. 46% of folks are dealing with FCC, 46% aren't, but 8% are considering it. Hopefully heard the good news story. And I think it's really exciting because you guys have a lot of the resources and tools that are required to move things forward into the future. And we have to all work together, all these different stakeholders. No one party can do it independently. You need the private and the public and all that good stuff. Ryan, can you give us a quick lowdown here, like 30-second pitch on what you're doing with these cohorts, and we want to branch out into the digital world. And then I'll let Colin finish with how he's supporting that, and I'll put it out to the audience as well. If you're interested in working with us, essentially the three of us on the call in the capacity of, bringing you this kind of education in your business, are you interested? So Ryan, you got your big elevator pitch you've been waiting for your entire life. This is your moment.
Well, what I realized not too long ago is that, like, hey, folks have a general understanding of a lot of these tools, but no one's actually like grabbing their hand, helping them, guiding through it. Okay. That's the biggest thing. Now, I consider this in almost any other aspect of the farm. If there's some new combine or sprayer technology, you go into these courses at your dealerships. People are intensively training you on these things. If there's a new chemical, your rep is out there teaching you about the new, the new mode of action and apply it here and all the nuances. And there's very few people talking about the nuances on these particular things. So I came up with the idea, well, maybe I should bring some of my clients in and give them a day-long session or a couple day-long session on how to execute these things. And literally, after I did this with my current clients, like, you could see their knowledge go from here to here, their comfort level go from here to here. So we said, hey, why don't we do this again? Colin came to one and he said, hey, would you consider doing, these for FCC across the West? I said, sure, let's do that. So we've had some success this past year. And then this year, we're looking to try to expand that on an online platform, like through Growing the Futures here. See if we can be as effective doing it, with a multiple hour-long sessions versus a kind of a 2-day intensive. So we're going to be experimenting that with Dan.
Colin, how are you? How does FCC play into this?
Well, I think the opportunity for us is, like we said, we don't always have the expertise in house. So how do we leverage that expertise that's in the industry? So for us, it's an opportunity for, those that are customers, but also I think we want to open this up to, for sure, those 8% that do want to become FCC customers and allow folks to experience what it's like to be part of these cohorts. And so we're going to sponsor some seats. I think we've got 3 in-person cohorts we're going to do this year, plus this, virtual platform, which I'm super excited to see what happens there. And then we're going to learn as we go. We're going to get feedback and we're going to understand, like, was this valuable for producers? And if it is, we'll keep making investments in the things that our customers tell us are important to them. That's what we do. And so looking forward to trying this out and looking forward to, again, helping everybody get that extra $1 a bushel.
Well, we had 2/3 of the live audience today said that they would like to know when this goes live, and we had 29% said maybe, keep me posted, and 7% said no, thank you. So we respect you as well. But it's and of course there's lots of options out there. Getting a coach is all I would say is find people to coach you at the things that you're not passionate about or it's not your unique ability. I wanted to mention Hammond Realty and Crop Aid Nutrition and Myers Norris and Penny and Grip and Convergence Conference 2027 and Bone Trail Originals is helping make this channel possible. And of course, having FCC on here is my honor. I think we've had you folks on the channel in a couple different ways, but appreciate both of you. Thanks so much for coming on. And Colin, I'm proud of you. You're heading off for holidays. I can't imagine the pressure of being in the corporate world sometimes. So kudos for all the work that you do. And I hope that you get a chance to unplug and spend some time with your family.
Yeah, me too. Looking forward to it. And everybody enjoy the summer. And if you need rain, I hope you get it. And if you need sunshine, I hope you get that too.
Thanks. And Ryan, I really enjoy working with you. It's been good getting to know you ever since Derek Talon recommended that we hook up. It's kind of been a great collaboration. I'm excited to work with you on this.
Yeah, been a lot of fun. Thanks for having me.
Yeah,
hey,
so
and
check
Derek Talon was our goalie back in the day. So we talked about Ryan as the defenseman and me as the forward. Well, that was the guy between the pipes. So yeah, Derek's a great guy.
There is 1.5 degrees of separation in the agricultural community, and that means all of you are connected with us. So I appreciate you as well. So have a great, hopefully a little bit of holidays too. I mean, we're still spraying, but at some point here, hopefully we get into that summer season where you can take some time off and take a breath and get ready for harvest, which is always a tough season. But we appreciate you in agriculture. We got Kate Saucer coming up on Tuesday talking about time management. That's going to be amazing. I seen all you signing up and putting your time management challenges into the comments, signing up. She's going to teach us. At 25, she's amazing what she's doing with her time, which is one of the most precious commodities that we have. And then on Friday, I've got Dr. Sylvain coming on, debunking a bunch of myths that are running around out there with their, like chickens with their heads cut off out there. And so that's going to be really fun to hear a bunch of things that he's one of the only one that's really coming forward and saying, hey, that's not true. And it doesn't always get the coverage, but he is the #1 management podcast in Canada, even bigger than the CBC, even though he's got no budget there, but he'll be really fun. He was at Convergence Conference. He was an incredible speaker. So enjoy yourselves. Colin, have a great holiday. Ryan, keep doing the good work you're doing. I appreciate you all. And thanks for coming on today.